Money is not just about numbers. It's about behavior, emotions, and the stories we tell ourselves. Welcome to Wall Street Books and Films, where we break down the best books and movies every trader, investor, and finance enthusiast must know. Today, we're diving into The Psychology of Money by Morgan Housel, a book that challenges everything you think you know about wealth, investing, and financial success. Before we begin, don't forget to like, subscribe, and turn on notifications. For more insightful content every week, Morgan Housel argues that financial success isn't about intelligence. It's about behavior. You don't need to be a math genius or have a PhD in finance to build wealth. Instead, your ability to control emotions, manage risk, and think long-term determines your financial future. This book is not just about stocks or trading. It's about why people win or lose with money. Housel explains that financial success often looks like skill, but it's usually a mix of luck, timing, and discipline. Bill Gates became one of the richest people in history. But what if he had been born 5 years earlier or later? The same applies to investing. Some traders hit big wins, but how much of that was repeatable skill versus pure luck? One of the most surprising facts in the book is that Warren Buffett earned $81 billion of his $84 billion net worth after his 65th birthday. His real advantage? Time. The longer you stay invested, the more you benefit from compounding. Yet most people try to get rich quickly and fail. Most people think wealth is about luxury cars, mansions, and designer brands. But according to Housel, true wealth is invisible. It's the money you haven't spent. It's the investments working for you behind the scenes. The richest people are often those who live below their means and let their assets grow over time. Why do people lose fortunes after making millions? Housel explains that most financial disasters happen when people don't know when to stop. Instead of securing wealth, they risk too much chasing even bigger gains, until one bad move wipes everything out. Many traders and investors obsess over returns, strategies, and market trends. But Housel argues that saving rate is more important than investment returns. If you save aggressively, even average returns will make you rich over time. So how does this book apply to you as a trader or investor? It teaches patience. Wealth is built over time, not overnight. 2. It warns against overconfidence. Even the best traders make mistakes. Manage risk. 3. It helps you avoid FOMO. Chasing hype usually leads to financial losses. 4. It changes your perspective on money. Focus on long-term financial security, not just quick wins. The Psychology of Money isn't just a finance book. It's a mindset shift. It teaches that wealth is built through behavior, not just numbers. If you want to make smarter financial decisions, this book is a must-read. Have you read it yet? Let me know your thoughts in the comments. And if you enjoyed this breakdown, hit the like button, subscribe, and turn on notifications so you don't miss our next review. Thanks for watching Wall Street Books and Films. See you in the next video.